So the question is, what should you do if you're offered a settlement by an insurance company? And that's actually happening more and more. In some ways, it can be a good thing, right? So the insurance company's purpose in doing that very early on in a claim is usually to try to control their costs. Maybe if they give you some money now, you decide it's worth it to end everything. You don't get an attorney. They don't have to respond to an attorney. It doesn't drive up their processing costs of the claim. And usually what they're offering you is a little lower than what the attorney would have demanded, so they save some money on that end too. It can be good if it's a fair offer and it prevents you from having to pay attorney's fees, because a contingency fee is usually around a third up to 40% depending on where you go. And so even if their offer is, say, 25% lower than what they would have given me, you might save money. I like that that's happening, because usually where they make a fair offer is on lower claims where the person is going to have a harder time finding a good attorney anyway, because the contingency fee is worth less in absolute dollars. What I don't like is when they make these offers and they are not taking into account the likelihood of future treatment that's been recommended. And sometimes the adjusters will even tell you that they haven't looked at your medical records. And if they dangle 5 or 10,000 in front of you, and it's a lot of money and it would really make your life a lot easier right now, it becomes very tempting for you to take that money. But what if that surgery that the doctor briefly mentioned does happen? It costs $20,000 and you're between insurances and you wind up having to pay a big chunk of that. You can run through that kind of money, $5,000 to $10,000, really, really quickly when it comes to medical bills. And if in that example, the surgery causes you to lose time from work and you don't have any type of disability insurance or anything like that, then you can see how your costs kind of balloon. And unfortunately, once you sign on that line to get the money, it doesn't matter what happens next. Your claim is over. And so what frustrates me about the process, and what the other side of the coin is that all too often the adjuster is offering way less money than they should be offering. And when people take it and later on they call me and say, this turns out not to have been fair at all, I say, you're right, but you made that call. So how do we deal with that? Usually what we try to do is this. If someone, say, picks State Farm as an insurance company, that adjuster offers you $5,000 and you say, gosh, I don't know if this is fair or not, I'd like to talk to a lawyer. When someone calls our office and they let us know that that happened, you do still have to sign a contingency fee contract, but we will add into the contract that we won't take a fee on the first $5,000. So that way it's more risk-free to you, because you can get involved with us. You've got an attorney looking things over, making recommendations, dealing with the insurance company and their algorithms and their adjusters. But that first $5,000 that they dangled in front of you, push comes to shove, if that's all the case is worth, you're not paying us a fee. And if we only get you, say, another $1,000 and it's $6,000, you're paying a fee on the extra $1,000. That gives people the incentive to call us, to use our office, to allow us to work the case, get them some more money and earn a fee for ourselves, but still protects that initial amount that the insurance company gave them before they contact an attorney at all.